So for increased revenue, I said this implies to run a business aimed at increasing sales, which can be done through different marketing activities such as promotion, discount, and sponsoring an international sporting event. The other way or the other key means of increasing your market share or getting your market objective is to increase your revenue. So how do you increase your revenue? You look at all business marketing activities that could allow you to sell more, like promoting your business, like promoting your product, promotion, advertising campaign. When you advertise your product, it's creating awareness. So a lot of customers, existing or potential customers, can see the product. When you do that, you are trying to increase your revenue. When you reduce the price of your product, giving discounts to customers, it's also a means of increasing revenue. It's not increasing profit here. You want to increase your sales. Okay. Do you understand? So the first one is to increase your market share, which means you want to gain customers from your competitors. That is when you try to increase the market share. You want to increase the percentage of your share in the market. The second one is increase revenue, which means you want to increase the sales of your product. You want customers to buy your product. And this can be done by increasing your advertisements. Okay. Sponsoring sport events, when like Heineken, you watch it in the Champions League. People can watch Heineken in the Champions League, like an advert, and start buying Heineken. So Heineken is sponsoring the Champions League, which allows a lot of customers globally to see Heineken, which might make them to buy. Mm-hmm. That increases the sales of Heineken. Reducing the price of a product, giving discounts, that can also increase the sales of the business. Okay. Do you understand the second one? Yeah. Then the third one, build a brand. A brand is the unique name of a product. So a business might aim at building a brand. And how do you do this? I said, this implies to a business aiming at establishing its name or product.
To be recognized.
Yeah, they want people to recognize that product. Mm-hmm. They want people to recognize that business. Yeah. You understand? So it's also an objective that a business can aim at.
To get recognition.
You understand? So I said this implies to a business aiming at establishing its name or product so that it can be recognized by people. A business can get this done by exploiting the USP, the unique selling point, differentiating your product from that of competitors. So when you do this, you are building a brand. Do you understand? So the three business or marketing objectives are to increase the market share. And what is market share? The total brand sale all over total market sale times 100. That is the formula for market share. 2 is to increase your sales, which means you use every marketing activities that can help you to increase your revenue. Mm-hmm. And the third one is making people to recognize your brand, letting them to understand that, this brand is different from that brand. This is the brand we're looking for. Let them recognize your product. Let them recognize your business. I think marketing objective is clear. Okay.
Can you write the formula for market share?
Yeah, I will. Go back to the product life cycle. So when we talk about the product life cycle, this implies to these different stages a product will reach before it gets to its decline, when the business will start thinking of extension strategies. So the different stages a product passes through before it gets to that stage of extension strategy is what we call a product life cycle. I think it's clear. So for a product life cycle, the product starts with development. You develop the product. After developing the product, you introduce the product to the market. Then the product starts gathering momentum, growth. Then it reaches a stage like, a lot of sales are coming in. That's maturity. Then decline. At decline, the product is saturated. You start thinking of where next or what next to do. How do you prolong the life of the product? So now let's look at each one at a time. So development, I wrote, this is a period where the product is being researched and designed. At this point in time, you need suitable idea to put the product together. So you are thinking of a product, you've made a research, you've done the marketing research, the product is available. The resources are available. So you think of the ways in which you have to develop the product. Suitable ideas will come from people. they investigate it, they develop it, they test it.
Okay.
So if it is tested okay, then you introduce it to the market. That's introduction, which is the second stage. The first stage is you develop the product. You investigate it before you test it. You investigate, you use suitable ideas. You investigate, you develop it, then you test it. Before you sell to the market, it has to be tested by making a prototype, a sample, so that you can view some response from group of customers, their response towards that product before you start launching it to the market. That is development stage. I think it's clear. Mm-hmm. Then we go to introduction. I haven't tested it, the product. You feel, yeah, it's ready, it's good to go, it can fly. Then you put it into the market. That is launching.
Launching, yeah.
So this is a stage where the product is being launched. As the product is new to the market.
Launching is introduction, right?
Yeah. So at this stage, you are introducing the product to the market. But what do you witness as a business at this stage? You witness a slow sale. The sales will be slow because the product is just new to the market.
So
nobody knows yet.
Yeah.
So don't expect
Everyone to buy it.
like everyone to buy an increased sale at that time. No.
So
Then it goes to that stage of growth. For the stage of growth, this is the stage where the product becomes established. Consumers are aware of the product. At this stage, sales may begin to rise. Do you understand? So the growth stage is the stage where the product is being established in the market. And at that stage, a lot of customers are already aware of the product. So you can start witnessing increase in sales. Is it clear?
Yes.
The fourth one, maturity and saturation. At this stage, the growth in sales will end. Your market share will become stagnant. It will be stable. So you won't expect to sell more. Okay. At that stage, you have constant return in the market share. That means if your market share is 30% in the total sale, you will continue to have that 30%. You might not see an increase in your market share. That means your sales cannot go up more than that point.
It's at peak.
It's at the peak. Yeah, thank you. So at that time, you should start thinking of extension strategies.
Okay.
And what are extension strategies? That's where we're going now. Mm-hmm. These are strategies you put in place as a business to prolong the life of your product. So there are two ways you can extend the life of your product. There are two approaches to it. Either you promote the product or you adjust the product. You promote or you adjust the product. So we're going to go there now. Okay, for extension strategies, I said this implies different ways to prolong the life of a product. That's an extension strategy. So there are two approaches to that. We have the product adjustments and promotion. So for product adjustments, you try to freshening up the products. Try to make it look down how it used to look like. Okay. So what are those things you can do for this? One, updating the product. These ways, firm will update their successful models. So those products, you won't have just one product. You would have different kind of products that you have produced that are going to decline. So the ones that are the models that are really successful, you try to readjust them, you update them. That is updating the product.
So it can keep up
with sales.
Yeah.
Another way is adding value. So when you talk about adding value, that means you improve the products.
Yeah, like packaging.
No, packaging is different. Packaging is another method. And there's no packaging anymore because you already have the product. You can't package it, you can only repackage it. You understand? But when we're talking about adding value, make different improvements to that product to increase the sales. You improve the product. Improvement on that product. That's adding value. The third one is extend the product range. So if it is only product A, you can produce product A Roman figure 1, product A Roman figure 3. So you are extending the product range. Do you understand? That's another way to. It's still the same product, but just looking different with the kind of model it is. Do you understand?
Just like Apple.
Like X marks. You understand? So that's increasing the product range. Mm-hmm. The fourth one, which is the last one, is repackaging. You let customers feel like you have modified the product by repackaging it. Mm-hmm. Do you understand? You know, when a product is repackaged, on customers' perspective, they feel, oh, something about this product has changed. So they might think it's not like it used to be. That means you have repackaged it. Do you understand? So ways in which you can adjust your products. 1, you update the products. 2, you add value. 3, you extend the product range. And 4, you repackage it. Is it clear? Mm-hmm. Then we go to promotion. Promotion means ways in which you can create awareness on that product to customers to increase its sales. 1, find new uses of the product. By advertising that the product can be used differently than how it's being used previously. So here, you are letting customers to know that this product, the way you are using this product before now, is different from how you're going to use it now. Yeah. So that's what we mean by find new uses for the product. Mm-hmm. Is it clear? Then you advertise it. Because when you find new uses for that product without advertising it, customers will not know.
That it has another reason.
So that's why we call it promotion. Mm-hmm. Is it clear? The second one, investment in advertising campaign. Boost your advertising. Spend on advertisement. When you spend on advertisement, it could increase your sales. And the last one, encouraging frequent use of the product. Advertise. Tell them that they should, here you're going to use what we call, it's an advertising method. Persuasive advertising method. Persuade them to always continue to use the product. It is only when they use it, it will get finished, then they buy another one. Yeah. But if they don't use it, they buy one and they put it there. It will remain there because they don't use it. Yeah. So persuade them to continue to use the product. Yeah. If you do that, they will use it and buy more. So these are ways in which you can extend the life of the product or prolong the life of the product.
Like they said here, to persuade people to eat cereal.
Yeah, persuasion. Yeah, we call it persuasive advertisement. Yeah. Is it clear? When the product is new, you use informative advertisement. But when it becomes saturated, you persuade them to buy. So in persuading them, you're just like begging them to buy. So show them reasons why they have to buy it. Is it clear? Yeah. So we move on. Okay. We'll go to Boston Matrix and product portfolio. So when we talk about Boston Matrix, here I go. It is a model that analyzes a product portfolio according to the growth rate and the relative market share. So it is an analysis. It is an analysis that tells you the growth rate of a product and a relative market share of the product. So because there's a product portfolio. What is a product portfolio? A product portfolio is the collection of different products that a business is marketing. So different products, product A, product B, product C, that this business is marketing is in the business, it's a product portfolio for that business. So that's why I said a product portfolio is the collection of products a business is currently marketing. The product you are marketing at this point in time, different products you are marketing at this point in time is your product portfolio. So when you use the product portfolio, when you are able to analyze the market share, the market growth, and the relative market share of those products, you are using Boston Matrix. Do you understand what Boston Matrix is here now? Yeah. It's a model that analyzes the product portfolio.
So it shows
of a business.
State are you in?
It shows the stage at which you are as a product.
So stars is the best stage.
Well, there's stars, there's cash cow, there's question mark, there's dogs. So we'll talk about that after this. So, but the first thing you need to understand is that Boston Matrix analyzes a business portfolio in terms of the product it's marketing. Okay. And you know what a product portfolio is now, right? Yeah. The collection of all the products a business is marketing currently or presently. So we're now going to, so in Boston Matrix, products are categorized into two, into market growth and relative market share. Okay. So when you're using Boston Matrix for your product portfolio, you have to categorize products into two, into the market growth and relative market share. So what is about the market growth? So how fast is the market for that product growing? So how fast is the market for that product growing? So how is it? Is it really moving? What is the position? The positioning of that product. in the market. Do you understand?
Yeah.
The second one is relative market share. So how strong is the product within its market? How strong is the product against its competitors? So these are the two things you check. So how are they buying this product? How are they buying it? That is the market growth. Is it really selling so fast? Is the revenue coming up so fast? That is the market growth using products, using Boston matrix. And the second one is the relative market share. How strong is the product within its competitors? So this is how you use Boston matrix.
Okay.
Is it clear?
So these questions will give you the what stage are you?
What stage you are,
Yeah.
what stage your product is
Okay.
within the market in terms of sales, in terms of market share.
Okay.
Do you understand?
Yeah.
So when you talk about in terms of sales, you're talking about the market growth. And when you talk about the market share, you're talking about the relative market share. That means you're talking about the position it is. Is it so strong? Is it having a competitive advantage over its competitors? So this is when you are using Boston matrix.
Okay.
Then you have to categorize the products into two ways: to market growth and the relative market share. Market growth is how fast is the sales of your products. Relative market share is how strong is your product against its competitors. Is it clear?
Yeah.
So we stop here.
Okay.
We need the information of Boston matrix to explain the ways in which you can balance your product life. So here, already we know what Boston matrix is. It helps you to categorize the kind of the business, the product portfolio. And what is product portfolio? The different kind of products that you are marketing currently as a business. That's your product portfolio. So these these products you are marketing, how are they categorized? What are they at this present time? That is when we talk about the stars, the dog, the cash cow, and what's the fourth one? The cash cow, the dog,
The question mark.
the question mark. So that means you've categorized using your Boston matrix the stage of your product. Okay. So for stars, like I said earlier about stars are in their earliest stage of product life cycle. So they are selling. At that point in time, they are in the position they are in the market is in their earliest stage. So a lot of people will buy because the product is new in the market. At that point in time, businesses might not be able to retrieve the money spent on those products. So that's why the cash flow is always at zero. Do you understand? Businesses will spend on those products. But as the money is coming in, they still continue to spend on it for advertisement, for promotion, so that a lot of people will be aware of the products. That's why for stars, their cash flow is always at zero. Is it clear?
Yeah.
So for cash cow, but stars, at the end of it all, they become cash cow. They are future cash cow. At that time, they have large market share. At that point in time, they are stable in the market. They are well positioned in the market. Do you understand? Stars, you cannot be permanent as a star. Your product cannot be permanent as a star. It can't. Your product is a star because it just started in the market. It's just starting to be launched into the market. So a lot of people knows the product. So maintaining that market share that you already have will bring you to a cash cow. That is why cash cow is better than stars. Being a star is not permanent, but cash cow could be permanent because it means that you are holding. And when you talk about holding, that means you are maintaining your market share. Do you get it?
Yeah.
So that's for cash cow. And we talked about question mark. Question marks are products that we don't understand why they are not selling, despite the fact that they are in a very competitive market and the market is even growing. Do you understand?
Yeah.
Okay. Then for dogs, they are not selling and the market is even slow. It has a very slow growth rate. Now, what do you do as a business? How do you balance things up? That takes us to talking about how we manage our product portfolio. So you have your product portfolio, which is what? The different products you are producing, you are marketing as a business presently. So how do you manage this product portfolio? How do you manage a product that is a star? How do you manage a product that's a cash cow? How do you manage a product that's a dog? How do you manage a product that is a question mark? That is what we're talking about, managing the product portfolio. So there are two ways you could do that. One, balancing the product lines. So when you are balancing the product line, especially this is for products that are stars and cash cow. Your stars, definitely you cannot make return on investment on them very soon. So other products that are, maybe you have another product that is a cash cow. So a cash cow would have given you a return on your investment. Do you understand what I'm saying here? Yeah. A cash cow would have given you a return on your investment. So that means with the cash cow product you would have gained more money with it, more revenue. So to balance the production line, the money you gain from the cash cow, the revenue you have from the cash cow, you can use it for the star. Because at this time, stars, the money will come and go out. There's zero cash flow. Do you understand? Yeah. But with a cash cow, it still has cash flow. And it's always positive. Do you understand? So the inflow is positive. That's why it's a cash cow. So you can use the cash cow to help the production line of the star. Okay. Do you get it now? Yeah. So that's balancing production line. Now let's go to taking appropriate decisions. So taking appropriate decision, what does it imply? Products in different categories in the market may require different approaches. So the way you approach, the way you are going to deal with a star is going to be different from the way you deal with a cash cow, which means you're going to even approach the dog and the question mark differently. Okay. So that means you have to manage the portfolio separately. Mm-hmm. So, excuse me. So let's go to the stars. Okay. Here I wrote, I said, they are future cash cows. So a business must build a brand to eliminate competition. So for stars, the future is for them to become a cash cow. So how do you make them to become a cash cow? By maintaining the market share, by building a brand. Build the brand. Let the brand be stronger. It's only when the brand is stronger that it will be able to compete with other competitors and take them away. Okay. So a star must, at the end of it, become a cash cow. And it must successfully eliminate competitors. Okay. And how do you take away your competitors? How do you move ahead of your competitors? By building a brand. Is it clear? Mm-hmm. So the approach for a star is what? To make it a future cash cow. And to make it a future cash cow, what do you have to do? You need to build the brand of that product. Building that brand makes the brand stronger. And with that, you have competitive advantage over your competitors. I think it's clear. Yes. Now, you don't use the same approach. You don't use the approach of a star for a cash cow. So how do you approach a cash cow? We call it a cash cow. It means it's already having a large market share, right? So what do you do about it? Look at what I said. They can be milked for cash. For cash cow, you can readjust them to make more money. You understand? Mm-hmm. You promote them, you add value to them to make more. Also, you can use them to develop other products. Do you see? Because you are making so much from them, you can use the revenue made from them or the profit made from those cash cows to develop a new product. So that means the revenue made from a cash cow can be used to maintain or to build or to produce a product, a new one. Oh. Do you understand? Yes. So a cash cow can be used to produce a future star. Do you get it? Yes. And also, the last thing you can do with a cash cow is to maintain the market share. By doing what? By spending on them again. You know, when you spend on them, it means you want them you want to solidify their position in the market. Mm-hmm. Do you understand? So you see that we don't use the same approach for star and cash cow. A star is a potential cash cow, which means whatever we are doing with it, we have to build a brand with it. so that it can eliminate competitors or stay far away from competitors, move ahead of competitors. But for cash cow, it can be milked. It's a cow, it can be milked, so it becomes so big and interesting and attractive for customers. They can pay more. You can use it to build a product, develop a product. And also, you can spend on it also to maintain the share, the market share. That's what they call holding. Do you see? So 3 approaches you can use for a cash cow. But one approach for the star, which is you build a brand. And in the course of building the brand, you are preparing it
to become a cash cow.
To become a cash cow. I think it's clear.
Yeah.
Then we go to the dog, the question marks. A business has choices. It can build a brand, hoping for it to become a future star. It's a question mark. The problem is not in the market. The market is fast growing. But why is the product not selling in this market that is fast growing? That is why it's a question mark. So what do you have to do? You can still invest on it, hoping that it becomes a future star. Or you divest. How do you divest? You sell. You sell the product because it's not making profit.
Yeah.
You just sell it. That means you divest. Do you understand? You've invested, but the investment is not yielding. So you divest because it's not making profit. Or you invest more. You spend more to hope it becomes a future star.
Yeah.
I think you're getting the product portfolio now better.
Yeah.
And the last one is the dogs. What do you do with the dog? You divest.
Yes, because it's not making profit.
It's not making profit. And the market is even a slow market. The market is not growing. So why do you have to invest on it? What do? You divest immediately. You sell out. Do you understand? So that's why the portfolio is important. You have to know where the stage at which your product is. Is it a star? Is it a cash cow? Is it a question mark? Or is it a dog? So if it is a star, how do you manage it? If it's a dog, how do you manage it? If it's a cash cow, how do you manage it? If it's a question mark, how do you manage it? That is what we talk about here. So do you manage them with the approaches?
Okay.
Or you balance the production line? Any question about it? I think it's clear now. You know what product portfolio is. You know what matrix is about. Matrix is about categorizing the product into different portfolio. I think it's